In this video, I want to talk about gross income, what that means, and what items are excluded from gross income. Internal Revenue Code Section 61 says that all income from whatever source derived is taxable, unless there's a specific exclusion listed in the Internal Revenue Code. Taxable income includes the following: compensation for services. We'll say something such as wages, 1099s. All right, so wages, 1099s, payments, business earnings. This could be from your Schedule C. This could be from without a Schedule C. This could be you cutting grass on the weekends. Property exchanges. Let's say you sell a home or a car. Let's say you sell a collection of Legos. Taxable. Interest. How about rents? Let's say you rent a room out to a roommate. That's taxable. If you have a rental property, that's taxable. Royalties. You wrote a book 10 years ago and you're still getting money from that through Amazon. Taxable. Dividends. All right, everybody loves dividends. They're taxable. Pensions. You retired and you think it's all over with now, but it's not. Taxable. Social Security. A portion of Social Security is taxable. There's a bit of a complex formula that we'll touch on in later chapters. And then income from estates or trust. Now look, in the event that you are given property instead of cash, that property will be valued at its fair market value. That's how you would report its taxable value in your gross income. This also includes illegal sources as well. So we have, in the event you sell illegal drugs, those are also included. So drugs, embezzlement, theft, etc. If you stole money from a bank and you got $100,000 from a bank teller, you're supposed to pay taxes on that. As crazy as it sounds, that's the way the law works. So again, Internal Revenue Code Section 61, all income from whatever source derived. All right, so now let's talk about some things that are not included in gross income. These are things that you can exclude from that calculation. All right, so this is just a very short partial list, but very common day-to-day exclusions that we are probably all familiar with. Child support payments. If you receive child support, that is not taxable. If you receive a gift, that is not taxable to you. Health insurance proceeds, again, not taxable. If you receive veteran benefits, both GI Bill, so we'll say GI Bill, or, well, let's go or and, it's usually and or, but let's go or and, disability, not taxable. Municipal bond interest. So let's say you have a VA state bond. Let's say you bought a bond from Richmond City. The interest from this is going to be not taxable. Now the state is going to make you pay taxes on that, but federally you do not owe taxes on that interest. If you inherited some money, not taxable. If you got a scholarship for tuition and books, that portion is not taxable. If you did, however, get room and board paid for, those are taxable. So payments for room and board, taxable. Tuition and books, not taxable. If you are a minister and you get a dwelling and you get a stipend from the church to pay for that dwelling, that is not taxable to you. And then if you happen to win the Olympics, the medal and cash prizes will not be taxable. Now again, this is a very short list. There are probably hundreds of these exclusions out there. Let's see what else comes to mind here in terms of items that are not taxable. If you had damage for a physical personal injury or a sickness, if you had relocation payments or welfare payments. I mean, the options are limitless here, but the important part is it needs to be specifically excluded from gross income in the Internal Revenue Code. And that is gross income and a list of things that typically do not fall within it.